Okay, great. We've talked about budget, how to get yourself ready to get ready for that monthly payment. We've talked about your credit and that you've checked it and you know you're as close to a 740 FICO score as you can be. Even if you're a 640 FICO score or higher, it's time to start talking to my mortgage guy and figure out what's next, right? So let's see. Next step is 3, money. How much money do I need to save if I want to buy, in our example, a $400,000 purchase? Okay, so let's figure this out real fast. So minimum down payment. So let's say you're a first-time home buyer. Well, a first-time home buyer is defined as somebody who has not had a home in the last 3 years, not owned a home in the last 3 years. So if you owned a home, bought a house 5 years ago, sold it 4 years ago, right? You only lived in a year, and that's been 4 years since you've bought a house, since you owned one, since you sold it, you're considered a first-time home buyer, okay? So what's the minimum you can do on a house? So 3%. 3% is the minimum down payment you can come in with for a conventional loan. Now and then if you go government loan, like an FHA, it's going to be 3.5% is what you need to plan for. Now you're going to tell me, yeah, but there's all these great programs that I saw 1% down, I saw $500 down. Yeah, okay, we're not going to talk about those right now. We'll talk about those in the next segment, so stay tuned to those. But I'm just going to talk about the regular, standard, cookie cutter, grade A type of mortgage that I want you to be ready for and plan for, okay? These other programs are great, and they will get you into a home, but I want to try to educate you and prepare you for the best scenario for you. Again, we're going for that A+ in school, right? So 3%, 3.5% is your minimum down payment. If you can do more, that's actually going to help you with a lower interest rate and a lower monthly payment, okay? So let's talk about that. Okay, what other expenses do I need to plan for? So in this example here, so $400,000, and let's say I'm doing my minimum, I'm going to do a conventional loan. I'm going to put CONV, and that stands for conventional, and that's $12,000. I'm going to need 3%, $12,000 to put down on a house for my down payment going 3%. What else? Okay, there's 3 different categories that you got to think about: lending, prepaids, and title fees. So what are all those? So the lending fees, that's to pay the mortgage people, right? So we have to pay our processing and underwriting, and those typically will be around $1,600 a month, or for a one-time fee. And there's going to be a credit pull, and there's going to be some flood certs, and there's going to be some other things that you have to pay for. Appraisal will be one of them here, and I got that down here at the bottom. So you'll have some of those expenses that you're going to need to pay for up front, or when you go to close your loan, excuse me, not up front, but at the time of closing, you got to cover these. That's the lending fee, okay? Prepaids. If you're not familiar with what prepaids are, I'm going to refer you to another video to look at prepaids, because that's a whole different ballgame. You have to basically prepay for taxes and insurance as they come due, and you're setting aside basically a separate bank account to pay for those as they come due, because they come out of your monthly payment. Okay, so you got to set up your prepaids and get a reserve set up for that. Title fees. So title, you need title insurance. You got a signing fee. There's some Alta fees. There's all sorts of things in there. HOA fees. There's all these different things that are going to fall into this whole bucket for you between title fees and other miscellaneous fees that you're going to have to come in with. All right. So how much does do these 3 basic things right here, how much should I expect for those? And I'm going to tell you about 2%. If you factor about 2% of the purchase price, that's going to more than cover what any expectations you're going to have for your closing costs. In fact, they'll probably be a little bit less than that in most cases. But if you prepare for that, you're going to be ready to go. What are some things you got to pay for before you close that are part of these closing costs? They're going to be part of this $8,000, okay? These are important things. So when you got shop with your realtor, everything's going great, you made an offer, they accepted it, woohoo, everybody's excited, and it was on the weekend. Now Monday morning hits, and your realtor goes, did you go over to title and give them the earnest money deposit? And that earnest money deposit is typically a percentage of the purchase price, sometimes 1%, sometimes whatever. So let's say 1% of this, so it's $4,000. So they'll say, hey, you need to go to title and write them a check for $4,000, or wire the money to title, okay? That's going to come out of that's going to come out of your down payment, okay? So there's that. Then you have your inspection. Okay, so after you've got your earnest money deposit down, you talk to your mortgage person, you've locked your rate, You're heading down the path here, everything's going really well. In that first 5 to 10 days, you're going to do an inspection on the home. You have to pay some money to have an inspector go out to the house and go through the roof and go through everything, find out if there's anything wrong with that house at all. And then that gives you a negotiating power to go back to the seller and say, hey, I need some more money, or you're going to compensate me or lower the price, whatever it is, you guys work out. But that's an inspection fee. So sometimes that inspection fee can be anywhere from $500 to $1,000, depends on the size of your home, but be ready for that out of pocket, okay? The other thing, appraisal. So talk to your mortgage person. Again, you locked your loan, you sent your loan disclosures, you're like, yes, let's go, but I want to wait till after the inspection, make sure everything's okay, but I want to order the appraisal. Most lenders are going to say we need to collect that appraisal fee up front in case you back out for any reason. The lender's not stuck paying that appraiser and you didn't reimburse them, right? So that would be a bad business practice for most lenders. So you pay for the appraisal up front, which then gets credited to you at the end for your closing costs. So you pay on a credit card. The appraisal fee can be anywhere from $500 to $800, $900 depending on the price of your home. So be ready for these things right here, okay? So as expenses that might come up for you. Next question I get, isn't there any way somebody can help me with these things? I've seen all these TikTok videos, I've been talking to my buddy, whatever, right? You've heard all these different people tell you things. And my job here today is to give you the right information, give you the correct information so you can come here and get the truth, okay? So can anybody help you with this stuff? Can I get down payment assistance to cover this 12 grand? The answer is yes. Yes, you can. There's programs available to you that can help you with. If you haven't saved for that $12,000, yes, there's programs available. Can I get my closing costs covered? This $8,000 covered? Yes. Right now in this market, the answer is yes. Most sellers right now are giving what's called seller concessions. And what that means is, say you did a price of $400,000, and they decided, we're going to give you up to 6% of this amount. So let's take 400,000 and multiply that by 6%. That's going to be what, 24,000? So they're saying, okay, you're going to still pay $400,000 for the house, but I'm going to give you a check or a credit. The title will show as a credit on the settlement statement of $24,000. And you're like, whoa, that's crazy. And you're like, okay, well, I don't need that much because my closing costs were only $8,000. Great. Now you're sitting here with a surplus of what, $16,000 left over? Okay, what are you going to do with that? Well, there's lots of options out there. So you can talk to your mortgage lender and say, okay, what was my rate? Where was I at again? They'll tell you, they call you and say, oh, you're at 6.49%, no points. Okay. And points means, did I have to pay any money to get this interest rate? Okay. So sometimes you go to your mortgage lender and say, hey, I got about 16 grand I can play with. How low can I get the rate? And they'll do a calculation. They'll go on the rate sheet, and every day it's different. So there's no rhyme or reason. I'm just going to make up a number. Let's say they come back and say, man, perfect day today. You're going to be able to get your rate all the way down to 5.625% with that 16 grand. That was the cost to get you here, and that's fixed now for 30 years, and now your payment went down. So a lot of times it's better to negotiate, to have the seller give you concessions and pay the full price up here, as long as the house will appraise, than it is to lower this price of this home by $24,000, because you're going to get a much lower interest rate permanently for 30 years fixed for the life of the loan. And we can go through some more examples on that later. But so yes, you can get some of these things covered. Right now, all day long, this is definitely a thing that you can have done, and especially in Arizona and most markets in the United States. Seller closing costs right now are definitely a thing. Almost every one of my contracts that comes by is somewhere between 3% and 6% in concessions to cover your closing costs. Down payment assistance, we're going to do another section for you on that. So stay tuned, and we'll walk you through it.